Okay, so once you've mastered how to buy stocks using common chart patterns like the cup with handle, double bottom, and flat base, the next step is learning where to find the proper areas to add shares to a winning position. The 3 weeks tight pattern is considered a follow-up buying opportunity. Now, this should only be a fraction of your full-size position. If you buy the same number of shares as your first purchase, your average cost will dramatically rise, and that could leave you more vulnerable to a loss if the stock pulls back to its buy point. So the 3 weeks tight pattern forms in the middle of a stock's advance after a breakout. It represents a brief consolidation in which institutional investors pause their buying rather than take profits. And the pattern occurs when there are 3 straight weeks with narrow changes in each weekly price close, no more than 1% to 1.5% up or down from week to week. Now, the weekly price changes generally shouldn't be wild, even if weekly price closes are narrow. And if one or more of the 3 weeks has a close that's low in the weekly price range, treat that pattern with some suspicion. Also, it's ideal to see quiet trading. Heavy volume in all or most of the 3 weeks is generally bad unless you see a bullish price reversal in big volume. Now, the buy point is the highest price within the pattern plus 10 cents. With this follow-on formation, try to buy as close to the buy point as possible, rather than give yourself that usual 5% chase zone. Keep an eye out for strong weekly volume when the stock clears the buy point too. Investors should also note that the 3 weeks tight is more compelling when it's a rare occurrence on the chart. Any chart that normally shows tight week-to-week action along a stock's run is a poor choice for finding a good 3 weeks tight pattern. You also want to seek out these patterns when they form after breakouts from first or second stage bases. After a third stage or a late stage base, treat any follow-on pattern as questionable. So using PayPal as an example, let's see how the 3 weeks tight pattern works. PayPal formed an early stage cup with handle base in April 2017. Within the base itself, there was tight trading action, and that's positive. PayPal broke out of the base and shares extended their gains on earnings. From there, PayPal formed a 3 weeks tight pattern. The weekly closes showed just fractional changes, and the intraday high of 50.35 on the stock's third week of the 3 weeks tight represented the high point for the pattern, making the buy point here 50.45. Now, after PayPal cleared the 3 weeks tight, it ran up 56% over the next 6 months before it pulled back to its 10-week line. So remember, a well-formed 3 weeks tight pattern can be a powerful place to add shares to a winning position.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube.
If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.